market that once again feels like it's been taken hostage by Europe, we can't forget that individual stock picking, when done correctly, is still the single best way to try to make money. And I've stressed over and over again, going back more than 7 years to the very beginning of the show, it's possible for you to be a better stock picker than the professionals. I know many people, maybe even most, believe the game is rigged against you, that it's impossible to ever get an edge on the pros, that by investing in stocks, you're just letting more sophisticated players pick your pockets. Others, including a guest on our own Squawk Box this morning, think you're too stupid to buy individual stocks, and you need to settle for index funds. But you can beat them, and tonight I'm going to prove it to you. So how do you get an edge on people who manage money for a living, picking stocks every day of the week, year after year after year? How about this way? By analyzing the squishy, ethereal factors that the big boys don't care about, the subjective stuff that can't be captured by the numbers and the spreadsheets, and using it to identify winners. We know this works. Why? Because it's been done. A little more than 3 years ago, back on February 2nd of 2009, right at the very depths of the Great Recession, Danny Meyer, not a stock analyst, Danny Meyer, the famous restaurateur and author of Setting the Table, a terrific business book, came on the show with a bold theory. Danny believed the companies which had mastered the art of hospitality would make you more money than their competitors that lacked what he called the hospitality quotient. First, I was skeptical. I believed there was a subjective side to investing. But this hospitality idea sounded way too nebulous for me. But Danny explained that hospitality wasn't just something you get when you go to your grandparents for Thanksgiving. It's a business principle. It's about being connecting. It's about connecting with your customers, knowing how to make them feel good, giving them not just a high-quality product, but also a high-quality experience that makes them want to keep coming back for more. So in order to test this theory, we created the Danny Meyer Hospitality Index. It's made up of 17 companies that he believes embody this hospitality factor. It's companies like Whole Foods, Chipotle, Apple, Costco, Amazon, Goldman Sachs, just to name a few. The result? All right, back when we first talked to Danny about this idea, the hospitality index stood at 65. Now it's at 232. That means while the S&P gave you a 65% return, the hospitality index is up a, drumroll please, spectacular 257% over the same period. Now there's some comparisons, huh? Look at that. That can't be random. It can't be idle. It can't be foolish. I very quickly became a convert to Danny's philosophy years ago, but I still find this outperformance to be incredible. Remember, Danny Meyer's not a stock guy. He's not a professional investor. Yet his picks left the averages in the dust. What's he doing? He's used his insights as a brilliant restaurant operator to create a prism for identifying great stocks, and that prism works. So maybe hospitality isn't as ethereal and gossamer as it sounds. Fact is, of the 17 companies in the original Danny Meyer index, only one, just one, underperformed the S&P, and that was DreamWorks, DWA. The other 16 left the averages in the dust. Really amazing, isn't it? The second worst performer, Southwest Airlines, still gave you a 120% gain. The only airline I should ever recommend, I guess. Whole Foods has been the best performer, up 867%. And remember, he recommended this in the depths of the recession when people said, well, who's going to go there? It's too expensive. It's followed closely by Chipotle, up 847%. Apple, in a not-so-distant third, up 623%. To give you a better sense of what that means, if you invested $5,000 in Whole Foods, when Danny came here and we created this index, $5,000, 48,350. 5,000 goes to 48,350. Squawk Box guest who said you can't beat the index funds. Well, I think you can. I think it's amazing how these companies have prevailed and even thrived in tough times simply by being managed better and thinking about these ethereal issues in business terms. Okay, how do they do it? Let's go through the index. For the bricks and mortar retailers in the group like Costco and Bed Bath, hospitality is all about creating a treasure hunt-like experience that keeps shoppers coming back for more, something Carl Quintanilla explored in the Costco documentary that's on tonight. That's not all. Hospitality is also about putting your customers and your employees first, before shareholders even, because in the long term, that builds a beloved brand, which ultimately creates more value for shareholders. And that Costco is the master of understanding this virtuous cycle. Amazon creates the same treasure hunt experience, but it's online. It also highlights the value of convenience, making it as easy as possible for your customers to get what they want. Hospitality. Same goes with Google. eBay. Then you have a retailer like Men's Warehouse. Believe it or not, that has been taking share from mom and pop stores by giving its customers better prices. I mean, when he mentioned Men's Warehouse, I was like, are you kidding me? It's killing everybody. To give you a convenient shopping experience. Nordstrom, the only department store on the list, has always been a master of hospitality. You might get a chance to buy that tomorrow because they disappointed tonight. Lately, they've made substantial investments to its website, making it an easier place to shop. So when everyone throws it away, maybe it's a place you should run to and not go away from. How about Whole Foods and Chipotle, the two best performers in the index? These are both very similar in that they're healthy eating plays that have built up a huge cache of trust with people who want natural and organic foods. When you shop at Whole Foods, you know you're not putting anything harmful in your body. That's the point of their good housekeeping seal of approval. Chipotle especially makes its customers feel like it's on their side via its Food with Integrity program. That's all about finding better, healthier, and more environmentally friendly ingredients in its food. Do I need to explain at all? Apple, greatest manufacturer of our era, greatest retailer, gorgeous game-changing products, beautiful stores. Then there's Brown-Forman, the liquor company responsible for Jack Daniels. That's a terrific sense of what its customers want and continues to invest aggressively in its brands while expanding overseas. Mattel. I don't know, not that good lately, but it's an iconic toy company that's moving beyond traditional toys into entertainment, publishing, and the web, creating new ways for consumers to interact with its brands wherever and whenever they want. American Express, charitable trust name, best customer service of any credit card company, along with powerful fraud prevention products, which are a couple of reasons why my Charitable Trust owns it. Southwest Airlines has always treated its customers better than any other airline. Goldman Sachs, Danny believes, is the best-of-breed investment bank. And those Muppet comments aside, remember that controversial op-ed page in the New York Times? It's usually in the business of putting its clients first, and I think it does. When I worked there, I always heard the client is always right. Timberland, nice call, Danny, got taken over by VF Corp. Major bundle. That leaves DreamWorks, the sole underperformer in the group. I talked to Danny the other day, and he suggested we remove DreamWorks and replace it with Cramer fave Salesforce.com. The software as a service company that practically invented cloud computing. Salesforce belongs in the hospitality index because, as Danny said, it's all about helping other companies interact with their customers more effectively. And that's why it's been having a ton of success poaching clients away from other software firms and posting terrific numbers. Think Oracle there, which is a stock I think you should sell. That's the ethos that CEO Mark Benioff, the Danny Meyer of the cloud business, has instilled throughout his organization. Not that anyone cares right now, though, in light of Cisco's blow-up that took Salesforce down $13 with it. Some worries about the quarter. If you like Danny's hospitality quotient analysis, it might be time to maybe you snap up a little tomorrow and do some weakness, and then after reports, buy some more then. The bottom line, when you're picking stocks, remember the incredible success of the Danny Meyer Hospitality Index. Companies where management understands the value of hospitality of not just delivering quality products, but connecting with you, the customer. That will make you more money than their clueless rivals. Maybe, just maybe, in addition to his incredibly successful Shake Shack restaurants, Danny Meyer should open up some stock shacks, too. Let's go to Jim in Wisconsin, please. Jim.
Booyah! Jim from Kenosha, Wisconsin. First-time caller, long-time fan.
Nice. What's up?
Well, my question is about Las Vegas Sands. They beat the street by 12 cents, had a great outlook with a huge growth in Macau. But last 6 days, they dropped about $10 a share. What do you think?
Well, I got to tell you, I like Las Vegas Sands. All the casino companies have been under a lot of pressure because Wynn, when they reported, just had some horrendous Vegas numbers. Also, people are very worried about China. Las Vegas Sands is one of those terrific companies that's going to keep getting hit as long as there's worries about international weakness, particularly in Asia. I like Las Vegas Sands. I am a buyer, not a seller. Let's go to Tariq in Illinois. Tariq.
Booyah from Chi-Town. Thanks for all your great wisdom over the years there.
I'm trying every day. Thank you. What's up?
Well, they got a great internet stock, Akamai. They had a blowout quarter, beat on the top and the bottom line. They boost their revenue guidance for this quarter. A little light on the top line.
That was good.
But they got pulverized. I mean, they're strong in the cloud and the internet.
Well, but think about it. Look at Cisco. Cisco's strong in the cloud and internet, and they had a negative forecast. So anyone who's strong in the cloud and the internet, including Akamai, is going to get hit because Cisco is a trusted name, and the CIOs in this country, all the technology guys in this country who do enterprise spending, they trust Chambers and they trust Cisco. And so that made everybody nervous, including people who may own Akamai stock. It's not just about the quality of products. It's not just about customer service, which is small. It's about creating a whole new ethos of hospitality. Danny Meyer understands it. Those are the stocks that are winning. It's a great way for the individual to pick them. Stay with Cramer.